Hello, everyone, and welcome back to the Trader's MindChat live show. Today, we are talking about distribution days, knowing when to get out of a trade. Now, distribution days are something that can not only help you figure out when to get out of a trade, there's something that can help you learn when to stay out of the market altogether. We're going to talk about some of the variations of distribution days, like what's a normal distribution day, when is selling normal to see in the market, like seeing on the way up? When does selling get to be a little too heavy in the market and causes it to roll over? When does it change character? And we're going to talk about some of the nuances of all of that. Before we get into it, if you guys that are here that are watching live, if you could hit that like button, share this out, drop a comment too. Let me know where it is that you are watching this from. I greatly appreciate it, and it helps the show. So let's see. Well, what do we got here? We have people over here on YouTube. We have people over here on Share Vision. A couple of people from Facebook. We have some people watching over on Twitter. Welcome everybody. Just like always, as you have questions, just type them right into the chat, and we will answer the questions as we're going through this. Okay. So let's get started. Distribution days. What are distribution days? A distribution day is defined like this. It's a down day on an index of at least 0.2% or more on heavier volume than the day before it. And so when you're looking at this chart over here, all those little upside down triangles, each one of those is flagging a distribution day. So you could see that sometimes distribution happens on the way up and it's no big deal, but sometimes you get some distribution and it causes a small correction. And you could see how some days, some distribution days are different than others, right? Like this distribution over here is different than this over here. And when you get a lot of distribution, this can happen. So distribution is all types of institutional selling. And when institutions start to sell, whether it's just a little bit on the way up, or if it starts to get clustered like we saw over here, we want to take notice. So why does distribution matter? Distribution matters because it takes a long time for the major players to unload their shares. They tend to sell subtly on the way up, and they tend to sell into strength in many cases. Like that, that's what we saw back here, right? Mm, if you're looking even from way back here and you're looking at this whole thing as a much bigger uptrend, there's distribution days in there. There's selling on the way up. They're selling subtly into strength. And it's really when you start to have a little bit of a change in character accompanied with the distribution, right? Like here, you could see as prices moving up and you have a couple of distribution days that the price action is kind of similar, right? Like the width of the price bars to incorporate some of what we've spoken about in prior live streams, taking a look at the width of these price bars. They're about the same, right? And then you get over here, slight change in character, but price corrects for maybe about, what is that, like 2 weeks, week and a half, 2 weeks, and then it resumes its uptrend. A little bit of selling in here, then some sideways action, again, another week and a half or so, continues its march higher. And then this is the first significant pullback that you get. And you start to see some wider and looser action just in there. Right? So that's how you can start to see some of the nuance around distribution. Price rebounds, and then you get this, right? So it's taking all those different elements into account. Any questions on that before we move forward? Give me a chance to take a sip of coffee. All right, we'll keep rolling. If we need to go back, we could go back. So yes, well, when distribution piles up quickly, you're going to want to look out. When we see four or more distribution days over any 2 week period, it's a sign that selling is getting more and more aggressive. And that's what really happened over here. This chart is actually from last year, 2020. We'll take a look at some of the distribution that we're seeing right now. In fact, it's getting a bit heavy as far as the distribution day count goes. So we want to count the number of distribution days over the past 25 days. And when we are counting the number of distribution days over the past 25 days, we want to use the 80-20 rule to find the extremes and plot them. When you see it getting extreme, right? Like, well, when you start to see the number of distribution days getting on the high side relative to what it's been over the past year or so, then that's time to start to take notice. So yes, extreme is relative. See what it's been over the past 12 months. So taking a look at this, right? Taking a look at this, and you start to see the distribution day count down here, right? So it wasn't very heavy back here. Right? Like even back here in this area, right? Distribution climbed a little bit, then it came down, then it climbed again, then it came down, and this peak, if you notice this peak right here, right where my mouse is about the same as this over here. So it's not very problematic in that regard. Then you start to advance, and then you're climbing up, climbing up, climbing up. And now, like, distribution is becoming a major problem, right? And that's before you get this monstrous drop. And that was just that first drop. That was that first drop back uh, in the beginning of March. It wasn't until the middle and later part of March where price really fell over. Um, you want to pay attention to distribution and how it within its normal ranges. So tracking distribution can be very important to figuring out the overall health of the market. Yeah, so again, here's the over the past 12 months, and here is I have an upper range and a lower range, and you can see uh, going from back here how distribution is within its normal range, elevated slightly, and you get this pullback. Okay, then price continues higher, and right around this area, that's where distribution is far higher than its range, right? Like starting from right around here, right? Like just because you pop above the normal range for a couple of days, that doesn't necessarily mean that you're going to get a severe pullback like this or a severe correction like this. But yeah, it puts it a little bit higher on your radar when you're weighing out all the different aspects of what I've been defining as market mood. It puts it on higher alert, and then you start to fit all the different pieces of the puzzle together. It's like, oh well, you know what, distribution is elevated right now. Let me factor that into the types of trades I'm going to take, the size of the trades that I'm going to take, and how I might manage any positions that I'm holding right now. Because uh, if I have some hefty profits in them and I don't want to give those profits back and I start to see action like this, well, it's going to affect the decision making, right? Like if I don't want to give those profits back, then maybe I start to sell some, right? Or if I am intermediate term. Maybe I'm an intermediate term trader. Maybe you're intermediate term. Maybe you are a longer term investor, and you start to see some distribution come into the market. Then you can better prepare yourself for that your equity curve to take a little bit of a hit over that period and not get freaked out because the market is rolling over. Well, it could just be normal behavior that you're seeing. So taking all that stuff into account. Um, any questions as we're going through the rest of this? Yeah, just checking with you guys. Okay, great. Now, uh, let's see price rebounds over here, and the distribution day count starts to dwindle, and then it's gets to be very low over here, right? You want to pay attention to when the distribution day count is also on the low side. And the reason why is because, well, everything tends to gravitate towards the mean over time. So, well, what'll end up happening is that you haven't had much selling in a meaningful period. So, what's likely to happen? You are likely to start to get some selling. And that's exactly what happened over here. And selling started to ramp up and ramp up. And, well, here's another pullback. If you can anticipate those things by tracking something like the distribution day count over time and understanding the ranges of where distribution tends to be, then you are in a much better position to say, hey, you know what? We are kind of due for a little bit of selling. Maybe start taking some profits. Maybe start locking in some gains. Maybe roll up the stops a little bit more aggressively in this area, right? And then distribution stays heavy for a while. So while distribution is heavy like this, right? Kind of hard for the market to get going when there's so much selling pressure, right? Eventually that pressure comes off just like it always does, but it takes some time. So that selling pressure comes off, price rallies, and you get hit with this distribution cluster right in there, and the market falls right over. Right. So that's why you want to not just pay attention to the bigger ranges, but to also pay attention day by day by day. And yeah, you know what? I understand that sounds like a bit of a pain in the ass, right? If you need to track distribution every day. I used to track this stuff in this other charting platform called MarketSmith, and I needed to track it and flag it each day manually. Pain in the ass, but it's okay. Well worth the effort. Now with TradingView, I'm able to have this done automatically. So if you're interested in those codes, let me know. I will send them to you. Put it into the comments. Let me know. Okay. Next up, distribution starts to come back in. It's in its normal range now. And what do you get? You get this nice big trend, right? It's just in its normal range. Not a severe dry up, not a severe selling, but just in its normal range. And that is the sweet spot for the trend to continue, having this natural progression, this natural selling. Uh, And then, well, over here, you start to get that spike again and you see what happens. It's why distribution days are important to track. They're not everything, they're one part of the picture, but they are important. So, again, distribution days play a supporting role. They're important, but by themselves, eh, they're kind of minor. Again, you want to use that 80-20 rule. Find the extremes and plot them, just like we did on that other slide. When you see it getting to the extreme, look for signs that price can move in the opposite direction, both on the high side and on the low side, right? When it was on that extreme high side, we started to see that being the bottom, and the price was starting to get ready to turn around. When it was at the extreme low side, that's when we started to see As selling starts to come in near the top, be ready in both directions. Again, extreme is relative. So when you do plot it over 12 months. Don't get lazy and just leave it wherever it was from 5 years ago, 10 years ago. Plot it over the past 12 months and you'll start to see that that range can fluctuate a bit. So, time for you guys to do some homework, learn some of this stuff, and cement this stuff on your own. So, after the live stream, right, and we'll have a complete Q&A in just a moment. But after the live stream is done, and in fact, you know what, we'll do some of this stuff together. But start by pulling up daily charts on the S&P 500 and the Dow. The reason why the Dow, you might be like, the Dow, who tracks the Dow? Well, on TradingView, you're able to code this stuff. That's why I like to use TradingView to do this stuff automatically. So label the distribution days that you find, count how many you're seeing over the past 10 and 25-day periods, and are you finding distribution days in clusters, or what is the deal? What happens when you start to see very little versus a lot? Yeah, plot the extremes. And if you're using TradingView Pro Plus like I am, yeah, get on the free newsletter and I will send you the codes. I don't believe that the PineScript codes work on the free version. I believe that you need to have one of the paid versions. So if you do have TradingView and you want those codes, or you're thinking about getting TradingView, hit me up and I will send you the link for the codes. But for now, let's uh, switch gears and take a look at some distribution in real time. And by the way, uh, let me know what questions that you guys have. Any questions at all about distribution days? Any questions at all about anything else that we covered? Um, or other parts of trading in general. What we're looking at here now, this is the S&P 500, and I'll make it even a little bit bigger for you guys. Zoom in some more. And what I have over here now, I'm just moving this so I know how many distribution days there are over the past 25. So I'm moving this part each day and this part each day. Okay, so over the past 25 days, there have been 8 distribution days. That's a lot. A lot of distribution days over the past 8. In the past 10, there's been 5 distribution days. Pretty heavy. Pretty heavy. If we go back to it, and here's something else that I like to do. I also like to track the distribution days in a spreadsheet. I track them right in here. I'm just going to make this a little bit bigger. I like to track the distribution days here. Right, so right now we're at 8. When was the last time we were at 8? The last time we were in the 8 neighborhood was back here. Back in the beginning of October. October, August. That's when I started tracking them on the spreadsheet over here. So October and August. Let's go back to October and August. So over here, started to hit it in the 8 neighborhood. Right, so August, we're at 8 distribution days over the past 25. Interesting, right? And then we start to fall off and pull back. Isn't that interesting, right? Here's your 8th distribution day, October. actually hit 9 in October before starting to turn around. Now, part of the reason why uh, tracking the count and seeing like how it uh, the extremes. So if we're looking back here and we're looking at like, oh, this is distribution day number 9, and looking at it relative to like how it was back over here, right? So we got into the 10. This is 9. You could start to see too, like how it might be an extreme case. You might maybe you start to see some distribution falling off, and to also realize too that distribution is just one part of the overall picture. So let me share with you too what's happening on this day or in this area right over here. Right. So down here, right, October 4th, I'm starting to get long. I believe I bought my first long. I was in cash and I started to get long. Let's see. No, not on that day, on this day here, October 5th. October 5th, I buy 3 I start 3 trades. So on this day right here. And you might say to yourself, Why in the heck would you do that? You have distribution day counts at 8. You are the day before, you're trading below the 100-day moving average. Like, geez, well, why the hell? Yeah, it's kind of crazy to look at it and think of it that way. That's one of the reasons why it's so important to not just look at an index, but to look at all the different parts, the moving pieces. So, yes, the distribution day count is high. Um, the distribution day count is not everything. It's an important part, but it's not everything. So also during this period, right? So now we're talking a little bit more advanced, some of the other nuances that you want to be paying attention to is what stocks are setting up, right? Like what stocks do you see setting up? And on that day, there were a number of trades that I saw. And so I decided to put orders in for 3 of them and see how they did. I saw some A-level setups. I wanted to test them. By the weekend, I had 5 trades, right? So from over here, 5th, 6th, 7th, 8th, and then have that distribution day there. That's a Friday on the 8th. And I'm holding 5 trades. Holding 5 trades. 4 of them are below the price that I paid for them, right? And I might be feeling like a schmuck, right? If if I didn't have all this other research and knowledge and experience, mostly the experience to sit through it. And part of it too has to do with my position sizing and understanding that part of the game, uh, and understanding how price can move. So, yeah, to sit with uh, 4 trades that are basically at a loss, um, and hold it over the weekend, and the market look is still trading below the 50-day. Yeah, it's not comfortable, but at the same time, each of the 5 trades that I was holding were showing positive price action. You might say, well, how could it be positive? Your price is lower than the price that you bought it at. How in the hell is that positive? Well, there's other things too that show weakness that's getting bought. For example, where's a good example on this chart? Um, Good example of weakness getting bought. So, mm, I don't see a ton, but maybe you you could make an argument that this day here was weakness potentially getting bought. It would be a hard like you'd get a lot of argument for me too on here if you tried to say that this was weakness being bought. Like it's easier in the rear view mirror, but on that day, you notice that price where price closed on that day. You notice where price closed on that day. It closed right on the moving average, right, or pretty darn close to the moving average, and it also did that on elevated volume. So that could point towards, oh, well, some of that weakness is getting bought. You get that confirmation a couple of days later, but that's what you had right around there. So just because price closes down on a day does not necessarily mean that it's weak. It could be weakness that's getting bought up. Um, so that's why I decided to hold those positions and ride them through. So let's see. Any other questions? Any other questions that you guys have? Got a few people here on YouTube. We have some more over on Facebook and Twitter. Wherever you're at, make sure that you're hitting that like button. Make sure that you're subscribing to the channel. We're also going to be taking these, and Spotify is starting to do video podcasts. So if you're over and you're watching on Spotify or Anchor or any of those places, first off, thank you so much. And yes, we're going to be posting a lot more content to those areas as well. So yeah, this time is meant for you guys. So hit me up with the questions. Again, you could follow me over on Twitter, on Instagram, on StockTwits at Michael G. Lamott, um, YouTube, and ShareVision, Mara Wealth on those areas. And what am I forgetting? Facebook or Meta, as it's now called. All those areas. Any other questions? Here's something that's indicative of the environment that we're in right now. So this is a trade that I had started yesterday. And here, let me show you what I did. Here we go. Here we go. Here's a question from Confluence Trader. Let me get through this example, and then I'll answer your question, Confluence. Okay, so here's part of what I was seeing on this. You might see this that and think, oh wow, that's some messy chart action or some messy annotations. But what I was seeing on this chart, a lot of positives in CMO coming into this. I was seeing this as a potential short stroke pattern, bullish pattern, starting with this blast off from the 10-week moving average on the weekly time frame, followed up by a short pen stroke that's near its top of its range. Volume is light, kind of a textbook short stroke pattern. Relative strength also near its highs. And I saw some pretty tight price action, both on the daily time frame and down here on the 30-minute. In fact, on the 30-minute, it tightened up even more before I bought it. And so yesterday, bought it as it broke above the day's high, and this intraday double bottom, picture perfect, broke out to this morning, hit my first scale out up here, so I'm taking some off, raise my stop to break even, and well, now it's I'm out of that trade. And this action is kind of par for the course for this kind of environment, right? How can I say that? Well, it comes back to this. Look at all those distribution days, right? 5 over the past 10 days. Look at all this other reasons for what I like to call a red market environment. A red market environment. Sideways action on the and starting to turn negative on the monthly time frames. the weekly time frames is starting to move negatively as well. Some of them starting downtrends. Same thing on the daily time frames of the major indices. Plenty of distribution piling up. The number of new lows out dramatically outpacing the number of new highs. Barely any setups. It's not a great environment, and so when I do see some setups, especially when I see a high quality setup like SEMO was, uh, part of the way that I gauge the market's health is to start a little test position, see how it does, and still follow the rules that I would follow. So scale out into strength, take a little bit off when I've made one times my risk, take more off when I've made twice my risk, let the rest run. Um, and see how it does. And in this case, it told me that, well, here's a little bit of money for your troubles, but the market is still kind of cruddy right now. So we'll see when uh, better setups arrive. But until then, I'm happy to be patient and wait. See, here's a question from Confluence Trader. How to know when a setup needs to be optimized? How do you know when a setup needs to be optimized? So there's a couple of different ways to think about this question. Let me know if I'm thinking about it the way that you intended. So a setup needing to be optimized as the type of setup that you're taking being optimized. So finding a better entry point, finding a better stop loss, finding a better target. If you're talking about those kinds of things, the way that you may start to look at it is to look at your success rate on that particular setup. So how do you do that? Uh, First way to do it would be to start tracking your stats. If you're not already tracking your stats, start tracking your stats. Um, Track what types of setups that you are taking. I take a variety of setups. Here are some of my close trades. Yeah, you can see that I take short strokes, flags, pennants. This one was a base on base. There's a flag, cup with handle. There's a lot of different setups that I take. Breakaway gap. This was a short stroke. So track the setup that you're taking. Something else that I like to track too is the stage count. So, how many times has, if you're not familiar with what a stage count is, it's how many times has a stock uh, made a basing pattern before running up. So, in this case, I'm seeing this here as a first stage base. Oops. That there, even though that's messy, I think you get the point. That's the first stage base, and then this up here was the second stage base. So tracking that would be the first thing to start to see, well, how to know when your setup needs to be optimized. I would start to see, well, what's my success ratio with this particular setup? And if you're getting like 50-50, that might be good, right? Like, so it's part of it's your success ratio, part of it's your reward to risk on that trade too, right? So it's figuring out those kind of things. Um, Another way to look at it too. Uh, let's see. Well, what are some other ways to look at your setups and well, what's might be needed in them? Uh, Another way too to see like if it should be optimized or not is to find that get another set of eyeballs on what it is that you're trading. Somebody else that uh, maybe trades in a similar way that's a few steps ahead of you, right? So basically, talking about coaching and mentoring, having another set of eyeballs to give you that kind of feedback on trades that should work or what you may want to consider having. And then a lot of it has to do with your own testing and seeing does this work for me, yes or no. Uh, in our own elite program, we have two coaches, myself and Stuart Chalmers. Fantastic guy. Uh, he actually has better trading results than I do. Though we're kind of on par, right? Like I believe he's at about 75% this year. I'm about the same. Last year, like phenomenal year. Like I think he was at like maybe about 400% or something incredible. But yeah, like we trade in a similar way, but we each have our own differences, our own customizations. Like I like to use Fibonacci as a confluence tool. He doesn't. Does it make Fibonacci good or bad? No, it's just what works for you. So your environment matters. Uh, get around other like-minded people, other people that are looking to help, people that are looking to, or people that are willing to sit with you and chat, and that's one of the quickest ways to shortcut your path to success. Uh, it took me a long time to realize that for myself, and when I finally did, that's when my trading took off. And it's one of the reasons why we built the Mara Elite program. So if you're interested, check it out. Yeah, here's the website, marawealth.com/membership. And you could go right there and check out the program. Anything else? Any other questions? Yeah, no problem. No problem, Confluence Trader. Glad to help. All right, so I think we'll end it here. All right, everybody. I want to say thank you all so much for joining me today. It's been fantastic as always. Tomorrow, what are we doing tomorrow? Tomorrow, I feel like we are doing. Let's see. Well, what are we doing tomorrow? No, I had notes over here to be more on the ball with this. Tomorrow is the pre-flight checklist for calm and productive mindsets. I'm going to go through a lot of what I do. I've broken it down to all these different sections here for what you could do for your pre-flight checklist to categorize, do each of these things, take what works, just like with the distribution days and everything else. Take what works, leave the rest behind. It's going to be great, and I look forward to seeing you guys tomorrow on the live streams. Till then, take care. Much love. Peace out. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.